All right. What's up, everybody? It looks like we are live. How y'all doing tonight? It is time. I don't know what it's time for. It's actually really late, and I don't know if anybody would be watching, but it looks like my tweet failed to tweet, so I guess I'll have to tweet it myself that I will be going live. Alright, going live now. Check my YouTube. Check my YouTube. That's the best I can tell you is to check my YouTube. I don't. I'm the worst songwriter. You know, I used to be in a band once, and they kicked me out. And the reason they kicked me out was I was the crazy one on stage, right? I couldn't. I couldn't hit the notes. Basically, I was the person that was just jumping around and acting all crazy, and so I guess they didn't want me in the band. Wasn't like we were going anywhere anyway. I mean, come on, we were just like some small town kids. You know, we didn't really want to plan to travel, like go like do shows or anything like that. So instead, we just didn't do any of that. Um, but anyways, what I'm here to talk about today is it's Forex time. It is Forex time, right? So what does Forex time mean? It means we're gonna do some stuff about Forex. You know, I've been doing a lot of crypto, and this one's gonna be all about Forex, right? All right. Sorry, I'm still typing away on my. All right, so first, what we have to understand before we get to the charts is, well, first we got to create a bias, right? We got to think about what's going to happen this coming week, right? So what happened last week? We saw a lot of the dollar going up, right? That was interesting. I'm not for sure why the dollar was going up, considering I feel like it was supposed to be going down. But when we take a look at the charts, it seems like, you know, it's kind of in the norm. So I guess we could go ahead and just go ahead and go on over to the charts to see what's going on here. Sorry, I'm still on my Twitter here. Hey, if you're on Twitter, why don't you go ahead and follow me, right? You can go ahead and follow me. I am Bodies and Wicks on Twitter, right? You'll get the most latest updates about me. You'll get some strategies, right? Everything's I posted, right? So right now shows me I am on Streamlabs, and all that good stuff. So first, what I want to do is I'm clicking through some things. All right, so the dollar, right? We're looking at the dollar. It has come down and it hit one, right, resistance, right? Well, it had actually had a couple. Now the reason all these lines are here, right? The reason all these lines are here is not because of I'm just drawing lines, right? The reason these lines are here is because if we go back to 2018, it has some kind of significance, right? So I'm going back all the way back to 2018, show you that there is some kind of significance that is happening, right? So whether it be you know, this one actually needs to be moved up, whether it be, you know, a regional low, right? We got some couple regional lows, whether in getting to the 4 hour, there's a 4 hour, you know, bullish order block in here, those kind of things. So you know, here, and then actually we can probably get rid of this one because this one would have been affected it actually going down into it. This one could have affected it if it came back up, but it looks like there were some equal highs here. And so what does that mean for the dollar now? That's a good question. So if we pull all the way back over, right, and we take a look at what is happening right now, right? So, you know, it kind of was making those kind of similar ranges. So it looks like this is the range that we were possibly going to be in, right? So we kind of got, you know, we got to one low, right, that the previous 2018 had, and now we got to the second low that the previous 2018 had, and now we are back up here. And now it seems like the dollar is, you know, it didn't really gap, but it did move up. I've already fallen victim to the gold. I thought gold was going to drop, and I put a good trade in on gold, and I, you know, got a good scalp out of it. And then I stopped, and I was like, why did I stop? It's going to keep going. So I entered back in, and of course it went the opposite way. But if I would have held, yeah, I would still be in the negative just by a couple dollars, but not by too much. But either way, it is what it is. And don't overtrade on Sundays, I think, is the first lesson to learn, right? So first, we gotta take a look at the dollar and try to understand what the dollar is gonna do. If we understand what the dollar is gonna do, we can kind of get a pre-concept and notion about what we think is going to happen in the future. So instead of looking at the dollar on the daily, let's look at it on the weekly, right? So on the weekly, right, what could possibly happen on the weekly, right? It could continue going up, right? Which is actually a fair possibility. Why? Because there really is, I mean, it did kind of, I don't know, we are kind of in this bearish scenario here to where it did come down, it bounced back up, and then it pushed back down again, right? And then it came down and it pushed back up, and now we're bouncing down again. So but there are equal highs along here. So what I am thinking, especially if we go from the week back to the daily, right? What I'm thinking is that we could probably end up getting above these equal highs, maybe even higher, and then hitting something like this level right here. This is what I'm looking at right here. And the reason I'm looking at this level right here is because this looks like a bearish order block, and I think if I get down to the 4 hour to it, it is a bearish order block, if I'm not mistaken. Yes, so it is the last time that the, well, it kind of has equal highs right above it as well, but you know, it could also be up in this area as well, and again that also, you know, covers the gap. Either way, we do see the dollar possibly getting higher, right? And the reason I think the dollar is possibly getting higher is that we also have to go into, let's actually go down to bar chart. That's one thing I want to do right now. Let me get here and let's go to barchart.com. The reason I want to get to barchart.com is I want to check out, well, it just kind of disappeared on me for some reason. Now, the good thing about barchart.com is that I'll give you the accumulative traders report. I'm sure you've heard me talk about that if you ever watch my channel. Accumulative traders report gives you where the large institutions are putting their money, right? So let's check out the US dollar index, right? Let's check out the most recent contract, right? Which is actually March of 2021. So people are actually putting their futures into what is going to be happening between now and March. Now, the thing is are we in a seasonal tendency swing? We are not there yet, but we are starting to head that way. So the dollar could still consolidate for a while before it releases into a, you know, a full-on seasonal swing into some sort. We did see the dollar drop, and as a dollar dropped throughout most of this, we did see commodity prices rise. As commodity prices rose, we also saw the stock market rise. You know, it's all part of the whole, you know, inner market analysis, I guess I should say. So it's all part of that. So now that we have the dollar, right? So it looks like the you know, everybody was shorting the dollar, and it was got bam, it was like shorted really bad. And then recently, it has been being longed, right? So it kind of took a, you see the open interest here when you see it take a dip, right? Usually means it's going long, right? So on the 12th of January, right, it looks like the bank started adding in longs for the dollar. And that was even in this area here, not even where we're at right now. So I think they're expecting the dollar to go longer, right? If the, you know, if this is where they started adding in the longs, because here they added in shorts, right? And it wasn't much more shorter that they could go, right? So they had to have cleared out whatever they had, whatever longs or shorts that they have in left. I'm not for sure how much shorter they think it's possibly going to go, but they do have until March to figure it out, basically. So that being said, the other ones that we want to look at, right, is gold, right? We want to see what kind of impact gold might have. Now, gold is actually interesting because it is also kind of the same way, right? It was shorted, then all of a sudden it was longed, right? And usually you see the opposite, right? You usually see the opposite of gold and of the dollar index. They usually both don't go hand in hand. They usually both go the opposite way. Now, the thing is, with the open interest being so low, is that you're going to have some people come in this market very, very soon, which I think is going to up the price of gold, right? Because nobody's paying a premium. They're probably offering very, very low on premiums right now to try to get people into the futures market. So that being said, premiums are probably going to come in, and I think the prices are going to rise because of the premiums, right? Premiums do have a lot to say. And generally, whenever you see something like a futures market, you usually don't see these type of candles right at the very end. So people are not sure what is going to happen with gold, which is very, very odd. It's showing you that there's uncertainty happening within the gold market. So what's to say about that? I don't really know. There's a lot of uncertainty in the gold market right now, which is interesting because I think a lot of people are looking at crypto, right? That's, you know, I think people are, you know, what once was the gold is, you know, is the world's reserve currency, is now being looked at as something else. And I even had a talk with somebody the other day, and they were talking about, you know, kind of like stupid end of the times like type scenarios and whatnot, and you know, everybody should put their money in gold, and you know, you should get away from fiat because fiat's just paper. And I had to, you know, kind of quietly realize them that, you know, if you buy into gold, it's also on paper, you know, unless you actually physically own the gold, you're not, you know, you don't actually own it. You know, if you've seen the stories from, like, you know, the whole, you know, the old barbaric ages, you know, the people that actually held the gold reserves, you know, actually issued like IOUs to the people that said they would pay them back. And, you know, they didn't actually have the gold to actually lend them in the first place. It was just all based on trust. So I think more and more people are waking up to this idea, and the fact that, you know, maybe gold is not the way to go. So we could kind of see a slide in gold. We saw it as soon as the market opened today. Gold dropped a tremendous amount, and I think what it did is it took out a lot of the liquidity to people that could have been holding longs in the market with very, very short stop losses. Knocked all those people out, moved up very rapidly, and then got above a high, and then it decided to actually move sideways after that. I'm actually looking at gold on my phone right now, and just to see what kind of reaction it is holding. Sorry, I have my phone on like a weird tripod stand, so I can always kind of go back and forth between what is going on screen and what is going on my phone. That way I never miss a beat. You know, I'm always on top of these things. I hope you know that by now. You should know that by now, because I'm just Ted, actually. I'm just a guy who sits on here and just rambles about the market, right? And don't judge me, okay? Now, that being said, let's look at the pound. Sorry, not that kind of pound. This kind of pound, right? So, right now we are in the again, futures market for the British pound, right? As it has been steadily going up. Now, what's interesting about this is that the commitment to traders report dropped off immensely. They went very, very short on the 12th of January, right? So not so much, less than a week ago, they went very, very short, and as you can see, it hasn't went that short at all. It really hasn't went short. So, and the commitment to traders are the people that really, really know what they're doing, right? They're the ones that that you should be paying attention to. This, and if you don't know which one's which, well, first, I guess I should show you how to get here. Once you go to barchart.com, what you do is you can find any kind of, you know, commodity that you can trade in the futures market, or anything that could have any kind of, you know, chart, you know, related to it whatsoever, whether it be a T-bond, you know, a 5-year note, you know, the euro bond, corn, you know, the indexes, whatever it could be. But I am going to primarily look at the British pound, right? So you click British pound, and then it'll give you a list of contracts, right, that are coming up. You want to click the most recent, right, because that's going to give you the most recent idea of what's going on, right? Over here, you have the full chart. Now, what you can do before you even get here is, and sometimes what I like to do, I like to look at options prices, right? And that way you can see what's kind of going on. Now, you have the put premium total, right? So, and you also have the call premium total. So you can see how many people are putting in calls and how many people are putting in puts. Now, question is that there is a lot more in the calls than there are in premiums, as far as the total open interest contracts. They're about the same. The calls are just a little bit more than the puts, which is interesting, which means there is less premiums, right? Or there is less cost in the premiums for putting in a put than there are for calls. So people are paying a lot more for the calls, thinking that it's going to go up, right? And they're paying the premium for it versus the people that are putting in the puts. Now, what you can do is you can do side-by-side analysis. You can see what the strike price is for each of these and where these contracts kind of lie, right? So open interest for most of the put contracts, or I would say at least the most open interest is going to be about 1.35, which I do believe is actually fairly close to where we are at now. It is actually heading there right now, 1.356. So that could be one reason why that is probably the mostly wide used versus you know, a very lower put contract, which would be 1.32, which you have about 1,115 open interest contracts, and the premium is only about, you know, 87.50. As to where most people are putting in calls, right? The calls, of course, these are not applicable because you can't go below those. Most of these open interest somewhere around 1.4, right? Looks like a 1.4 is actually the highest of the open interest calls. There's only about 8 of them, but you know, 1.39, 1.375. These two are about almost even. But I think the 1.39 is probably the most interesting. 1.395, as they both have a collective of about almost 300 contracts. Or the volume is about open interest is about almost 300, with the volume of those being almost 300, I should say. That's what I mean to say. So with that being said, what is going to happen? You know, let's go back and let's take a look at the chart. And like I said earlier, with the open interest, not even with the open interest, but you know, with the whenever you add the commitment to traders report, you get the commercial speculators here in the red, right? And they are the ones that went extremely short. So it dropped, the open interest dropped, right? So they went extremely short here, which is interesting because, well, the thing is that short could have been the time frame in between here and then the time it happened. So that short could have happened right here, right? So they could actually be adding longs, right? So maybe that's what's happening, is that this, you know, this is reported on the Tuesday, right? The Tuesday of the following week. That being said, you know, they could have added in all those shorts, expecting that one big drop to happen. And that may have been it, right? And they may turn around and then add in a bunch of longs, thinking that it's going to go long now, right? Let me pull this down here. It would just, there we go. So that being said, let's go ahead and take a look at the British pound, and let's think about this for a second. it did drop quite a bit. All right, so them adding in their shorts, probably within that last week, probably made a lot of sense, right? Because it did fall, and it did fall quite hard. The question is it going to fall like that again? If we are looking at this from a weekly perspective, it would have actually came into and hit this weekly order block, right? And that's why it started retracing back up. As it is falling again, the question is it going to get back down to that level? I don't think so, right? I think whenever we look at this and we look over here, the liquidity draws are all up in this way, all right? So it did hit, you know, the bearish breaker, which was, you know, this little spike down here. It came up, it hit that, right? Which is what caused it to fall, you know, a great deal, you know, in the first place. Now, what that should do is it should make it get below the low that caused it to get to that spike. And it did, right? So the previous low that happened was right here. So it got down below that low. Oops, sorry. Got down below that low. Now I'm thinking that it should start going back upwards, especially since the calls are all going up back up that way. You may have had a lot of shorts, and the reason that had a lot of shorts is because it did hit that bearish order block, right? But now what we should be seeing actually is it going back up. So my take on this weekly candle is going to be bullish. It's going to be my take on this weekly candle, and I'm going to stick to it. Something I have to do, you know. I can't be wishy-washy about this. There are days where it probably won't be bullish, but I have to, you know, learn to accept that and take a look at it from, you know, a perspective of the way it should be. So that being said, right, so it is now fallen back into this order block, right? So I had this down push up here, and then it pushed back up, and now it's pushing back down, right? We are now entering into a bearish order block or a bullish order block. That being said, I want to get my because what could possibly happen is, well, it looks like we're getting near the 618, right, of this wave, right? So if we measure from here all the way up to here, right to the top, as it's coming back down, you would expect it to get into, let me get rid of some of these lines here that actually do not make any more sense, because these are old lows that have been broken. And you want to keep what's current, but sometimes my trading view just likes to keep everything sometimes, right? So here's some old lows, right, that it could possibly try to reach for, right? And there is that possibility, right? So if it was try to get lower, right, it could possibly try to reach for these lows. I don't think it will, considering each time it makes a low, right, it doesn't actually get lower than the previous low, right, of a, you know, come up here, makes a low, you had equal highs, boom, it comes up, breaks those equal highs. What does it do? Falls back, makes the low. Now it's come back up. It hit the bearish order block, right? And then now that it hit the bearish order block, what did I just do? I don't know. There we go. Now we're back on track. Well, actually, the question is that now that it hit the bearish order block, how far is it going to fall? Generally, whenever these happen, again, it usually tries to get below a level that caused it to get there in the first place. So I would say it would be this level here, right? Because this was the last low before it jumped up and hit this, and then it brought it back down. So I think this was the last low that caused it to, drop. Now that it did drop, I would say it would probably get down into this golden zone right here before we would see it started to retrace. Now that we're looking at it on the daily level, let's look at it on the 4-hour level, right? And then right in between the 79 and the 7.5 is what? Right, so here you have these 3 little candles down here, and then boom, boom, you have this massive takeoff candle, right? And after the takeoff candle, you have a little bit of a retrace candle, then boom, does it again, right? So I would expect price to get down into this 770.5%, somewhere around in here. I'd actually draw a vertical line right here, because I think this is probably where it is going to get to. And then instead of having that low there, this right here. So I would think that this would be the zone for GBPUSD to retrace to before we start seeing a positive action out of this, right? So that's what I to me personally, this is what I would be waiting for. I would be waiting for this to happen. And as soon as it gets down into this this box, which I think will probably happen during the London session, right? Then I would see it start to retrace and come back out, right? There is a possibility, right, that you could see. I don't think it'll happen because it's a completely different. I mean, and you do have equal highs right here, not even really equal highs. This high broke this previous one here, so that would make this the new low, because you always go from the low that basically broke the new high, right? You wouldn't go back and take your fib and then put it on this one, because this would be basically 2 waves, right? You would only have your fib on 1 wave. So this is what I'm looking at, right? Because I think, again, there's a lot more calls than there are puts. People are paying little premiums for their puts, because I don't think there's gonna be that many. And if there are that many puts, like I said, everybody's got puts around 3.5. What are the puts again? Let's go back and look. Sorry if this is boring you, but I'm just trying to get a good grasp on what's going to happen to the GBPUSD this week. Options prices, here we go. I want to see the puts. And what kind of contracts we got going for those guys. So I really don't see. Well, we do have some puts that are in the thousands, right? Open interest in the thousands, down to 1.32, but there's no volume on that one, right? Right, most of your volume is at 1.34, 1.335. Let's see where that is. 0.34, 1.335. So we do have some people that are thinking it could get all the way back down to here, right? But most are not thinking that way. Again, I think this open interest drop, this this commitment of traders drop happened right here. I think a lot of people caught that wave down, right? And then now I think they're going to be catching this wave back up. Because right now we don't have the data, and we'll find out the data Tuesday to see, what kind of data it is. And then we'll probably base our analysis off that data. That's why usually Tuesdays is when you see a lot of things turn around, because you'll see what kind of data the commitment of traders have, and if it's what the commercial people think is going to go the opposite way, then it could be going the opposite way. So again, with GBPUSD, again, I marked it out right here. I think this is the area that it should go, somewhere in between 1.35 and 1.3. Let me see here. Here, let's just double click on this just to get the coordinates correct. 1.35028, so almost 1.350, and then 1.35349. So a good 30 pips somewhere in between there is a good entry area. And then after that, we should be going long again, because there's a lot of liquidity draw above here. There is a lot of liquidity draw. And again, right here, I even wrote it, strike prices for January calls. There's a big number of those right here at 1.38. So we're looking at 1.38 possibly before the end of January, and January is coming up. I think the GBPUSD, even though it looks like it's going to go down right now, it's just trying to get to the bottom of the weekly low. And it may not even get there today. It may not even get there tomorrow. Who knows? It could be just meandering around until all of a sudden, then boom, it hits that and it takes off. GBPUSD likes to have a mind of its own, and we never know really what is going on with GBPUSD until we actually take a look at what's going to happen with bar chart, like I just did, and then we can kind of formulate our own ideas. So like I said, commitment to traders went short, they got there. Now I think they're going to go long because of all the option prices that say that there's too many calls in that realm. There's not a lot of puts. Again, the puts are way down here. I don't think that's possible because we are making higher highs. We're not making lower lows. I don't know why somebody would call for a lower low. Oops, it just doesn't make any sense. So therefore, I think we're probably going to hit this area here and then continue on upward, and I would shoot for around 1.38 again, because that is where the highest volume of open interest calls were for call options. So now we'll see what happens whenever well, it looks like the European market is starting right now, which is, I guess, a good transition over to the euro. All right, so euro did the same thing. It looks like they decreased. Well, it looks like they increased their longs for just a second, and then by sometime last week, it looks like they decreased their longs and went for more shorts. So I can get rid of this line here and get rid of this information here because it is no longer valid. So it looks like they were increasing their longs just because they got this much, right? And then boom, as it dropped, it dropped. And why did it drop? Well, because it looks like it hit a daily order block that happened way back in the day, back in 2018, right? So if we look at this apparatus that happened in 2018, looks like it hit an equal high as well. So that's probably what it was. It looks like it was a liquidity draw. Liquidity being that they're, people look at this as an equal high, and they have their sell limit set right there, right? So once they have their sell limit set right there, looks like I got to that point, drove the market down, and then usually what happens again is it usually tries to get below the first low that drove it that way, right? And I would consider that low this low, right? This is the last low that drove it up before it pushed down. But it pushed down a little bit harder, and now we're about at that area to where it, looks like there is almost just like an open space of imbalance, basically, right? So there's a lot of imbalance in this area right here, which could prove that the euro could try to fill this imbalance, right? And then get down to another bullish order block. That bullish order block could happen right around in this area, filling all of that gap. Now there's a lot of put prices, put prices right around here, around 1.2. But if we look at the euro on bar chart here, and we take a look at it's already had its moment going down, just like the pound did. But then again, like I said, the dollar is still, I'm not XAU DXY. Dollar is still a conundrum, as if it's going to go, higher or lower. Is a lot of liquidity draws in the dollar that could eventually make it go higher. Another reason why I think the dollar is going higher, believe it or not, it has to do with crypto. The people that believed in crypto for so long, the people that were putting money in it back in 2012, 2013, 2014 even, the people that just kept putting money in it and believed it and believed it and believed in it. Once it hit 40,000, I can't tell you how many people probably just cashed out. Julia, what are puts? I would if I were you, I would research options trading. Puts are basically you're betting that the market is going to go down, basically. So you're placing in an options trade that says, hey, I think the market is going to go down. You have a strike price, which means you think it's going to hit this at least the strike price, and then once you hit the strike price and it gets lower, then you end up making more money, right? So and you go by contracts, right? So you put in, and the contracts go by the hundreds. It's kind of a little bit more complicated for me to explain. I'm trying to dumb it down as I can. But basically puts are a way to say, I think the market is going down, right? I think it's going to hit a certain price, which is a strike price. And then once it gets below that strike price, I make money, right? So that's what puts are. Calls are the opposite. Calls are, I think the market is going to go up. I think it's going to hit a strike price of this amount. And then once it gets higher, then I make that money, right? And then you have contracts for these, puts and calls. I am looking at them, in the January realm. They can be as far out as, March, April, May, and, whatever. So that's just a good way to look at, what puts are. and especially with the dollar. You know, I don't think I looked at gold. I looked at euro. I looked at this. I don't think I actually looked at the dollar to see what people are thinking about with a dollar. So I'm gonna use the British pound here, and I'm gonna erase this out. We are gonna go down to the U.S. dollar, to wherever it is. There it is, U.S. dollar index. And let's see what people are thinking about the U.S. dollar. Now, like I said, the best thing to look at, you know, let's see, looks like the closest contract out is March. Skipped right past January, right past February, and the next contract is March. So probably not going to give us the best kind of data, considering people aren't, you know, in a rush for it to make it this amount. Oh yeah, I guess I did go over the dollar earlier, because I remember they shorted it, you know, for so long, and then now recently they decided to long it. And so now, well, actually this is the commitment to traders. Never mind, commitment to traders is in the red, correct? Let me just double check. No, yep, commercial speculators. All right, commercial speculators in the red. That is your you know, people that play in this market are the Deutsche Bank, the JP Morgans, the Federal, well, not really the Federal Reserve, since they really can't, they don't own any money. But you know, IMF, any kind of large bank, but you know, Bank of England, they're all playing in this space, right? They're not just you and me. It's also large institutions, and that's why we have a commitment to traders that tells us which accounts are which. They know, you know, your large speculators are like your hedge fund manager people, you know, those type of companies and whatnot. And your small speculators are people like you and me. So they know who's investing, and they know who's investing where. And now your commercial speculators are actually went long here. So they've been going long, interestingly enough, since back here, right? So they've been going long since back here. And then they keep going longer and longer, which honestly tells me I think the dollar is going to rise even more, right? So almost anything I just said about the British pound, you might want to rethink, because if they think, well, they did just short it, it looks like recently, so it looks like they could be thinking that dollar, well, they started shorting it a little bit here, right? Around the end of the year is when they started shorting the dollar, right? So they were longing it here, which means, you know, it looks like they probably got, you know, and whenever they long things, right? Whenever you get these and they start longing things, the reason they long it is because they're catching the bottom of the market. They're putting in a lot of longs at the bottom of the market. Now, they didn't put a whole lot in here, but during this week, it looks like they did put in a lot of longs, right? And so it was probably from right around here, right, when they put in those longs. And then here they put in just a little bit more longs, and I think it was probably right here is where they put in those longs. And then they started shorting it this week. So they started shorting it probably right here, and then they really didn't do much, and then now they shorted it again. So it looks like they probably shorted it probably right up here. So never mind. I think I'm gonna stand with what I believe in. You know, the dollar could raise up a little bit more, but I think ultimately it's probably going to end up dropping, right? But then again, these are March contracts. Think about that. These are not contracts that are going to expire anytime soon. These are, you know, people who are thinking long term about where the dollar could be. So longing it way back here, you know, could mean that, you know, by March the dollar could be up here and they're going to hold on to that. It's not like it's going to expire tomorrow. But then also there are people who do want it to short and short very quickly, and that could be, you know, those people that are shorting it here. So my personal opinion, I think the dollar is going to get just a little bit higher. It probably is going to try to take out some of this liquidity that is resting above some of these highs, right? And then fall, right? Or it could just start falling. I think, you know, like I said, before I read the question, what is happening to the dollar? Again, is possibly a lot of a transferring of the people that had a lot of money in Bitcoin, or, you know, other kind of, you know, digital assets, who just got extremely rich whenever Bitcoin went from, you know, 10,000 to 40,000 within a matter of months, right? So those people that believed in Bitcoin for so long, you know, eventually got what they, you know, put all their money and time and effort, you know, into, and they decided that they were just going to sell off all their Bitcoin and retire. What that did is that switched the Bitcoin to, you know, the United States currency, and that possibly is what helped pump up, you know, the U.S. currency recently, was also the rise of Bitcoin. So, but that being said, we are printing money at a rate like no other. We are printing money, you know, and then we also have, you know, the introduction of another stimulus bill that's coming up. These are all things that could just devastate the dollar, right? So we had, I think, this recent run, right, that we've had going upwards, was due to a lot of people jumping out of Bitcoin, retiring from Bitcoin, things like that. And now we're going to start seeing a massive decline again in the dollar. And if you'll excuse me, I'm sorry, this is my channel, but I have to, you know, so I can't step away to smoke, but I'm gonna smoke while I'm on online. So that being said, I still think I stand by my guard when I say that GBP is going to end up being down here and then jump up, because I think the dollar is eventually going to go down. You know, again, with GU falling, that would mean that the dollar is going to rise, right? Oops, sorry, wrong one. Which means the dollar is probably going to rise a little bit, right? And then so that means the GU falls, and then once the dollar starts falling, that means the GU is going to start rising. I think the same thing is going to happen with the euro. No, the euro could probably fall very the euro sometimes falls a lot faster, and sometimes it doesn't move at all whenever the dollar moves. It's really weird. Both of those kind of act that way. It just depends. But I think the euro probably could eventually break some of these lows, right? That we have, you know, it basically every day, you know, the price tries to either break a low or a high from the previous day. That's just like almost like I wouldn't say a standard fact, but it, you know, if you ever look at I mean, look at this daily chart here. You only have one day, right, which is the green candle here, to where it did neither break a high or break a low. But otherwise, you know, you go from day to day. This broke this low, and then this one came up. It didn't necessarily break the high, but the next day, you know, well, actually it didn't break the low either, but it got close. But the next day it sure enough broke that low. The next day it broke that low. So that's what you try to look for whenever you look. I always aim for lows and highs whenever I am trading, because generally that's what happens. It's always trying to break the previous low or the previous high from the the day before. So I'm looking at the daily chart now. I'm doing a top-down analysis of both EU and GU, including the DXY, the dollar index, in all of these. So previously, whenever I was doing this, I was marking out all of these daily lows because this would be where liquidity rested, right? And I remember like it was yesterday, because it was yesterday or a couple days ago, where the euro was just like tapping on this, but the dollar was also almost hitting a high, and I knew the dollar was going to break the high and retrace. And so I even made a call. I'll even show it to you here on TradingView. So if you don't follow me on TradingView, it's always a good idea to do that, because every once in a while I'll make a good call. And I don't know why this one got pulled, but it did. That's really weird. For some reason, they decided to not publish this one. I don't know why. But here is what I'm talking about. I say buy EU and GU as soon as the dollar breaks this high. I was thinking the dollar was going to break this high and then pull back. And then at the same exact time that was happening, it was right around here. If we get down into the 1 hour of it, as you can see, it was why does it show 12? It was definitely earlier than that. Oh yeah, it was here. Oh no. I don't know, the times aren't lining up from what it was. It's really odd. Because when it broke it hard, but I don't remember it breaking it at. Wait, am I on? Oh, you know what? I don't think I'm on the right time frame. That is why. That would make more sense. Okay, there we go. UTC6. Here we go. There we go. It was around 7 o'clock in the morning. That's definitely when it was. Whenever it was doing this, and then whenever I made my call, it was also around 7 o'clock in the morning, and I said it was going to break this high and then pull back. What did it do? It broke that high, and then it definitely pulled back, and then the euro did the same thing, broke the low and then pulled up. And so that's why I said to buy the EU and the GU at that time, and so it did. And but that was only for a very short-lived moment. That was for that trade. I'm glad I called that trade, because I definitely had a great day that day. But then the EU just started to slide off, right? EU started to slide off. And the same thing happened with GU. I want to say it was right around here when it happened. Or no, it was here actually. Let's get down into the 1 hour of things. It was actually somewhere right, or was it up here? Or was it more over here? I don't know. The G was a little bit funky that day. I remember that. It dropped actually really. It made a pretty good drop before it started to come back up. All right, let's see what date this was. 14th. Okay, that makes a little bit more sense. 14th, around 7 in the morning. There it was. Okay, so here we go. 14th, around 7 in the morning. It drops, and then boom, right after that it goes up. And for some reason it kind of came back down, and then it went right back up, and then that's when it decided to break these highs. So GU did the same thing. You know, they both went sideways for a little bit. I know that. I know EU decided to move a little bit this way before it decided to go up, and then GU same way. You know, went up, then went sideways, and then decided to go up after that. So, and then again, both of them started sliding. GU started sliding the following day, EU started sliding the following day, and then the DXY started going up, right? So DXY, well, that was up here. So here was when I called that, when it fell, and then it started going up. And so now we got to figure out where we're at with that. So again, I still think DXY is going to be going up, which is going to be causing the GU to be going down right into this little area here. The euro, same thing. I think the euro is going to be falling at least excuse me, at least until it clears this low, right? A lot of people are thinking that since there's a low here, this is going to be a safe support level. All right. There, you got a safe support level right there, right? Oh, come on now. Let me... All right, you got a safe support level. Not always. No, that's not what smart money does. Smart money does not give you safe support levels. The banks, the institutions, they know that you're going to start buying at this level, right? They know that as soon as you get down to this level, you're going to start buying. And probably what's going to happen is that what you're going to see is that you're going to see it come down to this level, right? Let me get rid of this widget here. Come down to this level, right? And probably start seeing it bounce up. Everybody's going to start chasing the buy. It's going to come back down and then bounce up. Everybody's going to start chasing the buy, and then boom, it's going to go right through it, taking out anybody who is buying in this area, because that's what smart money does. Smart money knows that you're the one buying in this area. The dumb money, the people that don't understand that the people that have the most money in this want to take your money, right? So instead, they'll sell right through it. And I think that's what's going to happen. But the question is, where is it going to end, right? Well, it's got to end. I mean, and right through all of this is basically a big gap in price. So if you were to see a big gap in price, it would look like this. I mean, like basically if you were to see like no price between here and here, it's basically the same thing. If I am not mistaken, if we go to like a 15-minute chart and we look over there, I don't think there is. Yep. See, same thing. It's just all green, so it just all pushes up. So basically this is considered just one big old gap. I think the price is going to drop for you know, like I said, there's put prices here for 1867. So I think these people are probably right. I think that you will probably get down to about that area, right? Before it starts buying again. If we were to put this on a 4-hour label, and then see this as one big one big wave here. I think since this is the last push down right here before it goes up, I would use this as my support. Let's go all the way up to the top here. It would be right around in this area if it would let me. There we go. I think I got it. And then go back up. Let's correct it a little bit. There we go. I think we're at the top there. Yeah, we are at the top. And then here we're at the bottom. And then where does that lead us to? Interestingly enough, the put price is exactly at the 80% mark. Just below these equal lows is at the 70.5%. So this is exactly the golden zone, right? This is the golden zone of where you want to buy, basically. We're actually already in that golden zone, but I wouldn't buy just yet because you still have a daily low, an equal low almost, and then you want to wait for it to break that. And then once it breaks that, then it's going to continue upwards, right? And the reason it's going to continue upwards is because there's the liquidity pool. There is way too much liquidity above here that the price wants to reach to, right? So it can get down to this put price. Everybody gets down, you know, if it gets down to here, all the people that have the puts in this are happy, right? They get out of their put contracts, they make money, and then boom, it goes the opposite way. I don't think it's going to continue falling. I think the dollar is going to continue to fall, which is going to create the EU to continue going up. And if we look to the left of the chart, right? So if we look to the left of the chart, we have our zero, our put price, all that right here actually, which is interesting. So it's at a spike right before this goes up. Halfway point is almost at, you know, this area here. Right now, the high that we have is at this area, which would be almost like a bearish order block. So, oh yeah, like I said, also equal high. So also liquidity draw. So now what you want to do is I want to draw a bunch of liquidity draws going across, just so I know, and I actually want to label them just so I know what I'm what these are. Liquidity. Hello, not capitalized. Why is it keep capitalizing on me? All right, liquidity draw. Then same thing here. I thought I copied and pasted liquidity draw, not the YouTube link. So price is going to want to get back up to these areas. And there we go. And then eventually it's going to want to break these highs. So that's what you have to watch out for moving forward. First, going lower. Oops, didn't mean to move that. And the thing is that, again, the COT, so you have a commitment of traders report actually you can find that in the in here. If you go to indicators and strategies, you can search for, actually what I search for is COT, and then I think the one I have is, oh no, oh yeah, RCOT, there it is. So you want to search for this one. This is the one I like. R_COT, commitment to traders. That's the one I have, that's right here. But you can actually just search for commitment traders, and there's all kinds of people that do have commitment to traders reports. The one I have is the one that a lot of people, a lot of other people use. Actually, I want to check out some others to see what they look like. You know, let's see what this one looks like. Yeah, I mean, similar numbers are the same. Looks like he just well, looks like he added in some volume or something in here. I'm not for sure exactly what he did. Override product, I have no idea what that means. It looks like there's a delta in there. Interesting. Okay, that's kind of cool. Let me look for some other ones. But the cool thing about having a commitment to traders on your actually trading view map is so that you don't have to come here to, you know, to bar chart and then, you know, go and look it up and be like, oh, the commitment to trader report, you know, is right here. However, the commitment to trader report on bar chart is for specifically each currency. The good thing about the commitment to trader report on trading view is that it's about the crosses, right? So it's about not only you know, it's about GBPUSD, right? You don't get that on bar chart. You know, it's on Euro USD. You don't get that on bar chart. You just get like the euro. So you get to kind of see how traders, or at least commercial traders, are trading. You know, the actual what we're going to be trading as well, and not just the futures of the currencies. So that's what I like. So again, waiting for this to pull down. Again, I'm going to be bearish, or not bearish, sorry. I keep getting bearish and bullish mixed up for some reason. But I'm going to be bullish on both Euro USD and GBPUSD this week. So I'm only going to be looking for buys. I'm not going to be looking for sells. So if I wanted to, I could sell right now until it hits this if I wanted to, if I think it's actually going to do that, which I think it is. But I don't want to. I want to wait for the buy setup instead. So, but it just depends on what kind of trader you are. You know, maybe you're the type of person that wants to sell into that, right? And you want to wait for the retracements and sell the retracements. Maybe that's the way you like making your money. Maybe you know exactly where the retracements are going to be, and instead of, you know, holding the buys. Some people don't like to hold the buys. They would just rather sell the retracements and get out. So like I said, it just depends on what kind of trader you are, and how you play your game, because everybody plays it differently. But I think I can get rid of all of these daily lows right now, because they are no longer intact because we have broken them. That's the reason why I like having them, is to see what's the next one that we're going to break. And then again, I have the daily highs already marked out. Looks like there was a daily low here. That looks like we already taken that one out. And then another fun fact is that usually at the end of the day, the price likes to hang around daily lows and daily highs that they have broken. or previous daily highs and daily lows that they have broken, and then they'll go back up to them and then break them again. Something I've noticed quite a bit. So like this one, whenever it broke this high, it kind of retraced back, and then next thing you know, it pulls up and makes the daily high for the next day. But again, it hit this bearish breaker, which is why it dropped. Again, it's gonna drop below some lows, to clear those out, and then now that those have been cleared out, it'll probably clear out this one here too. And then once it clears out those lows and fills this gap, right? Because there's this gap right here that needs to be filled. Clears that gap, and then I think it's going to hit this the 1.200, if not a little bit less, and then probably turn around and go back the other way, right? And then we'd be looking for it to get up a little bit higher. Let's see what the euro, actually, let's see what the option prices are for the euro. And I want to see what the calls are. Now that we know what the puts are, I remember putting the puts in. I want to see what the calls are. Calls are definitely outweighing the puts. So it looks like a lot of people are also bullish. And if we go side by side, and this is for the February contract, right? This is like, I don't think they had a January contract, so it looks like this is what people are expecting to happen before the end of February. If we're looking at calls, people are looking for it to get as high as 1.232. It looks like we have 1.22300, which is odd. I think we're already almost there, are we not? Well, we're almost, yeah, we're kind of getting, I mean, here's 1.2300. So the calls are really not as extravagant, not as high as what I thought they were going to be, unless there's another setting I'm missing. Oh yeah, near the money. Here we go. So just hit show all. And let's see. Here we go. This is what I'm looking for. Got 136. Well, there's, let me see here. Let's see if there's any open contracts. So there's no volume for those. The volume is already mainly where we're at. But there are open interests around the 1.36, 1.35, 1.34. I think a lot of people are looking for it to get around there. As for the puts, yeah, not too many people thinking it's going to get that low. I mean, I'd be surprised if it got down to 1.02. That'd be the euro is about as equal as $1. I don't think it's going to get that low. 1.225, 1.220, 1.215. Yeah, I think the put people are on the money. But then again, these are also people that, have already had their contracts opened, and they're just waiting for it to hit that number before they close it, and then these numbers go off the board. So we shall see. Let's see here. Let's take a look at gold. Wow, okay. Gold definitely shot up. I was wondering if that was going to happen because, like I said, I drew the line here, right, of when the day started, and as soon as it started, gold just took a dive, right? So I thought gold would go up because I thought gold, you know, if anybody holding a long over the weekend, what would happen? It would take all of them out. That's what smart money would do. It's definitely what smart money would do, right? Make them restart all over again. Make them rethink if they want to actually hold a long position. Um, and considering gold is actually going up at the same time, the DXY, well, the DXY is not really doing much, is it? It's kind of hanging there. It did go down, but now it's starting to go back up. But I think it depends on what kind of, I mean, I'm on the 5-minute on the gold spot. Let's check out the DXY on the 5-minute and let's see what it's looking like. It's just kind of going sideways. There's nothing really spectacular about it. But again, this is also very, very early in the week, and we should see what happens. And I do think gold, especially looking at this, again, there's not a whole lot of interest, which is so interesting to me. Usually you have full candles over here, and you just got like little blips. So nobody's really putting in an option for gold. I don't think they have any idea what's going to happen. Look, there's no open interest down here. I mean, usually you got a ton of stuff. I mean, if you look at the euro, oh, I don't have that chart open. Look at, look at the pound. You got a ton of people putting in, what they think is going to happen. Putting in their contracts. While we're here, why not? Let's check out one more. One I haven't checked out in a while, but let's check out the old Canadian dollar. I haven't checked out UCAD in forever. Yeah, it doesn't look too promising for UCAD. So if UCAD is going down, the dollar goes down, I think it's just kind of a race to see who has the worst currency almost. Right? Looks like the traders, they went short as well. Looks very similar to the dollar, except for the open interest. Kind of climbing, a little bit of a dip and then up. I think this would cause Canadian dollar to fall. Maybe go up. Oops. Let me see what the prices are. And let's check out. I wonder why they did that. USD CAD. Not trade now. I don't need to trade now. Well, I guess it'll open up a chart, so it doesn't matter. touch anything. Come on now. What are you doing to me? What are you doing to me? I didn't do it. All right. Canadian dollar is, wow. So they've been shorting it for quite some time. Less short. Or actually, no, sorry, longing it. My bad. They've been longing it. So this was a good long right here, right? Longed it even more. Not really sure why, because it fell. All right, well, I guess. Where they? Oh, they probably longed it right here. And that's where this whole report came from, which is the one area right here where they longed it. Got out of that trade, shorted it, and that's where they got the information from this here. Shorted it at the height of this, and then again shorted it again at the height of this. Probably longed it, going back up. Let me get these off of here so it doesn't. That being said, along with a dollar, if the dollar is going to continue going up as I think it will, what's probably going to happen to the dollar, as you can see, there is a bullish order block through here. So if we were to throw a fib onto this, right, and we were to go to the bottom of that, didn't mean to move that, and you can just see it drills down. So I wouldn't be surprised if, and you got some equal lows in here, so there's some liquidity. Yeah, I wouldn't be surprised if this falls right down to this area right here, that 70.5 to 90.781, then turns around and goes the other way. Again, only because there's a lot of liquidity above. I don't see a whole lot of liquidity down below. No equal lows. It's just a lot of climbing. I mean, there could be, I could be completely wrong. But considering the fact that the dollar did open above, right? There's a big gap above. Tells me that the dollar, you know, wants to reach that way, is what that tells me. Even though this didn't make it above, I think having that path, right, you know, to something like that, and then trying to jump up above here would be something like the dollar would do. So what does that mean for the CAD? It means it would pull it down. But then again, depending, you know. Well, these are old drawings. It's how long it's been since I've paid attention to the CAD. I got a weekly order block from last December, and it got below that. And like you do have two equal lows right here, which is somewhat equal lows, semi-equal lows. Lows equal enough that the dollar would see that and then seek out its liquidity, right? Which would mean higher rates for the dollar, which would mean, well, US CAD would mean higher rates for the dollar. So then again, it would actually get just a little bit higher. And then if I think the dollar is going to go down, eventually that it would pull down and then go back down through these. So all right, now we shall see what happens throughout the week. One last thing I want to check before I get off of here is, of course, my baby, not Euro USD, but I want to check out Ethereum. A lot of mumbo jumbo in here. Let's get into the 15 minutes of it and let's see what's going on with it. Okay, it's happening. It's happening. What I thought would happen to it is happening. Did not break the opposite high. It did hit the order block, and it's starting to fall. Right, I bought here first. I hit take profit 1. I hit take profit 2. That was in my, let me see here. That was in my profile here. It's the ETH buy smart money. Yep, set to buy, and then pointed out where to take profits. Right, so take profit 1, take profit 2. I said once it got above take profit 2, you take your original trade and then pull it to even. That way, in case it got below it, it'd be taken out of the trade. Right now, we would be taken out of the trade. So let me go ahead and update that trade idea. Right. So, out of original trade. And then I said I would enter in around here. And I think that's probably what they may have gotten me for. They may have not have published this one right here. The idea was hidden for violating house rules. If you think your idea should not have, please contact our moderators. Yeah, I think it was this. When I say something like enter at 11:52, that puts them at financial risk. So I wonder if I can delete that and anyways, I'll contact one of their moderators after I get done with this. But anyways, that's all I got for you guys tonight. It is getting late for me. I need to be up in a few hours actually before I go to work. So thank you for watching, and I shall see you all hopefully tomorrow night after I make another video, and we'll see what happens with the Forex, and we'll see what happens with the crypto that I called earlier tonight as well. And who knows what's going to happen, right? I mean, it's just going to be a crazy day, a crazy week. Actually, it could be a very, very slow week. I mean, we never know what's going to happen with these kind of things. But thanks again for watching. Hope you got some kind of enjoyment out of this. Hope you got some kind of knowledge out of this. Again, I just try to bring smart money and into the realm of people who are generally trading retail money, and generally how that thought process does not work and it costs them more. So I like to try to help people not to lose their money, because I have lost so much money thinking about the retail world and thinking about how buy here, you know, on this trend line, or, you know, buy on this flag or something like that. And I've realized it's all about levels. It's not about, you know, it's about liquidity and finding liquidity and things like that. And those things have actually turned my game upside down and made me a lot better trader. So I'm just trying to help people out, you know, who haven't quite got there yet. You know, I'm still an early trader. You know, I've only been trading since May of last year, but I feel like I've made quite a bit of progress, and I feel like this year is going to be a very, very good year for me. And I'm excited about it, and I'm excited to share it with you. So thanks again a lot for all the support. You know, there is a link below there where you can support me if you would like, and if you'd like to. Thanks again, and like I said, I'll see y'all as soon as I can. Hopefully it's tomorrow. All right. Peace and love, and good night.